It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show right here on the Big Talker, 1250 WTMA and WTMA.com. If you have been waiting for the Federal Reserve to ride in like some sort of superhero and magically save home affordability, I've got some news for you. It didn't happen. In fact, that's exactly what I want to talk about today, because I think one of the biggest misconceptions in real estate right now is that buyers are simply sitting around waiting for interest rates to drop. And that may have been true 2 years ago. It may have been true last year, but I don't think it's as true anymore. And that shift in the Charleston real estate market, I think, is what plays into all this activity that we are now seeing. And it's happening in ways that I think a lot of people haven't really recognized yet. I mean, for nearly 3 years, I would say, we've kind of heard the same story, right? Once mortgage rates come down, buyers will come flooding back. Prices will soar again. I mean, how many times have we heard that? Economists have said it. Real estate agents have said it. Builders have said it. The media has reported it over and over. And honestly, you know, there's a version of it that's very believable. But I think here's what's actually happened, right? Mortgage rates haven't moved around. They've dipped a little bit, then they've risen, then they've dipped again. They're certainly better than the peaks that we saw, but we aren't anywhere close to the 3% loans that so many people were accustomed to during COVID. And so people are buying homes anyways, not necessarily because rates are more attractive, but because people stopped waiting, and waiting just didn't make sense anymore, right? So, I mean, think about your own life. Imagine putting off something like replacing your roof, right? You tell yourself, look, I'm just going to wait for prices to come down. It's too expensive right now. And then a year goes by and nothing really changes. Another year goes by. Now your roof is leaking, and eventually you don't replace it because it's cheaper and you timed it perfectly right. You replace it because life doesn't wait, and housing is exactly the same way. I mean, it reminds me of one of my favorite quotes by Benjamin Franklin, which is that you may delay, but time will not. You know, people get married, people get divorced, people have kids, get transferred, retire. Parents need care. Kids leave college. Businesses grow. I mean, life keeps going regardless of where interest rates happen to be. And eventually the question starts to change, right? It isn't when will rates be lower? It's when does my life need a different house? And I think that's the psychological shift that's happening right now. And so I think buyers have finally accepted something that a lot of the experts didn't, which is that 5% mortgages, they may come, they may not. 4%, maybe someday, nobody knows. But waiting indefinitely definitely has its own cost. I mean, let's say you've delayed buying for the last 2 years because you were hopeful that rates would come down a percentage point. And during that time, you've paid rent, you've missed appreciation, you've watched inflation continue, you've postponed equity that can be built in your home. You delayed making your house your home, maybe. And I think a lot of people eventually kind of realize that I'm paying a price for waiting too. And that's something not very many people talk about, that waiting just isn't free. Now, does that mean everybody should go out right now and buy a home today? Absolutely not, right? You should buy because it's the right decision for you and your family and your finances, not because you're afraid of missing out for FOMO. But if you're financially ready, waiting for some, I think, magical decision right now from the Fed can become a pretty expensive strategy. In fact, they've kind of said the opposite, that they're not cutting, they're hiking. So I think that here's what makes the Charleston real estate market fascinating, is that, we're working with buyers who aren't necessarily asking when will rates fall. They're asking, what can I negotiate? And if you've listened to my show over the past few weeks and months, that's really what's kind of happened in this market. Is the COVID market's over and people are now negotiating. And that's what the market wants. And frankly, it's kind of what the market needs if we're, removing selfishness from the market and just looking at what creates a healthy environment to buy and sell a home. It's certainly not having to waive your inspection and waive an appraisal and pay above asking price on a home you've never seen before because you're buying it from out of state. But that's what was going on during COVID. And so I think that the fact that now we've got this market of negotiability, that's a huge change in and of itself. Today's buyers want leverage, and they haven't had any access to that really in years. Builders are also offering huge incentives. We're going to talk about that a little later. A lot of sellers are helping buy down interest rates. More often than not, last statistic we have was that 60% of all transactions had the seller paying the buyer concessions in an average of $9,000. So closing costs and negotiations are back. Repair requests are back. Buyers are negotiating things like appliance packages or fencing allowances or a new roof, flooring credits. I mean, the list goes on, which obviously was like unheard of in 2021, 5 years ago. I mean, you were lucky to even have your offer considered a few years ago. I think people, though, they only focus on one number, and that's interest rates. But affordability in and of itself isn't determined by one number, right? It's determined by dozens of variables, purchase price, taxes, insurance, HOA fees, maintenance, closing costs, seller concessions, loan programs, builder incentives, which there are a ton of right now, future refinancing opportunities. I mean, one buyer might be able to get a significantly better overall deal at like a 6.5% rate with $25,000 in concessions than the same buyer getting a 5.5% interest rate that's paying $40,000 over the asking price and waiving every protection imaginable, right? The rate definitely matters, but it's not the whole story. So I think there's another reason, though, that buyers have changed, and that's technology. I mean, today's buyers really know more than they've ever known. And if you think about the fact that real estate agents used to be, it hasn't been this way in a long time, but we used to be the gatekeepers of information. You had to go to a real estate agent if you wanted access to the kind of data that you should be analyzing when determining what your home is worth or what you want to do with regard to an offer on a home, what changes are happening in the market, so on and so forth. And so now that's changed, right? We don't have the ability to say you have to go through me to get the information. It exists in an unbelievable degree, right? People are watching YouTube videos. They're researching neighborhoods, comparing schools, looking at flood zones, insurance rates. I mean, they're making decisions faster in the grand scheme of things because they've already done months worth of homework before they even call an agent. And we find that time and time again. We as a real estate team do a lot of marketing for our listings. And that, of course, generates a lot of interest and leads, right? A lot of people inquire about the properties that we're marketing because of the way that we market our homes, right? We use demographic, geographic, and behavioral data to essentially identify the people that exist out there that lead us to believe they're getting ready to make a move. And we market your home to them directly. And there's a lot of factors that go into that. But when we receive, the contact information for somebody, the industry standard, according to the National Association of Realtors, states that the average amount of time between the time someone first starts looking at real estate until the time they actually purchase something is 14 months. That's a long time, right? But think about the amount of data that they now have access to. And at times it can be analysis paralysis. But I would say that in Charleston, we're seeing something fairly unique right now. Inventory hasn't really improved compared to really the ultra tight conditions of a few years ago, right? They're giving buyers options again. Now we're seeing a steady rise in inventory, but it is kind of at a snail's pace. We're still 1,000 homes for sale less than what we were right before COVID kind of took over and changed the world. And even then, we were in a seller's market. So now we've got some options for buyers. Properties are sitting longer. Demand is starting to fall a little bit. Really all revolves around affordability. How much can I afford to pay per month? And does that price match up with what I can afford, right? So I think instead of feeling pressured to buy the first house they see, a lot of buyers are comparing neighborhoods, negotiating terms, and they actually think through one of the biggest financial decisions of their lives. I'm saying that somewhat in jest because you have so many people that have relocated to Charleston. Somerville, I think, was the third most relocated to zip code in the country. This was like 2 or 3 years ago. But I say that because we're having a lot of conversations with folks right now that basically moved to Somerville from a different state, California, New York, Chicago, wherever. They moved to Somerville thinking they were moving to Charleston, and then when they kind of got there and got settled in, they realized that it's not really quite what they thought they were getting, and now they want to move. And the problem is, as an example, in Somerville, so many people moved in such a short period of time, and we had builders building massive amounts of inventory, that is a saturated market. If you want to sell a home in Somerville, you have to be aggressive. There is no let's overprice it and see if someone makes an offer and we can always come down later strategy. That is not necessarily, I don't want to make it sound so, aggressive, but it's almost like a death sentence. You're going to earn less on the sale if the strategy is not consistent with the dynamics of the market. And so buyers finally feel like they have some breathing room, and that's healthy. And one thing I always tell my clients is try not to time the interest rate market. I mean, time your life, right? If your family has outgrown your home, if you're relocating, if you're retiring, if you're downsizing, fill in the blank. Those are life decisions. Interest rates and financial conditions, those can change. You can refinance a mortgage. You can't refinance the years you spent waiting for your life to begin. I'd say that here's one more interesting point. I think a lot of buyers who purchased when rates were higher are already refinancing as opportunities arise. And that's, we've been talking for kind of years at this point of, hey, if you go and buy a home, let's negotiate for the seller to provide you with something called a 2-1 rate buy down, which essentially means that the seller, let's say interest rates are 6.5%. We'll make it really easy. Let's say interest rates today are 6.5%. What the seller will incentivize a buyer with is a 2-1 rate buy down, meaning in the first year, your interest rate isn't 6.5%, it's 4.5%. It's 2 percentage points lower. Then in the second year, it's 5.5%, 1 percentage point lower. Then in the third year, right on the 25th month, your payments are now at the original rate that you qualified for when you purchased the home, which is 6.5%. But the idea is in 25 months from now, rates should hopefully be lower than where they are now. And a lot of lenders have been so hungry for business that they'll refinance you at no cost or a very low cost. And so that's what a lot of people have done. I still don't, frankly, see it enough. I think it's a fantastic incentive, and it revolves around the struggle in the market right now, which is affordability. There's only so much money to go around. And so what's the takeaway, right? The Federal Reserve didn't suddenly rescue the housing market. Buyers adapted. They accepted uncertainty. They became more strategic. They negotiated harder. And I think they focused on total value instead of a single number or data point. And frankly, I think it's a healthier mindset than waiting for, the perfect conditions that just might not ever come. So if you've been wondering whether this is the right time to buy, or you're trying to decide whether it's now time to sell and then buy something, I would love to help you by running the numbers based on your situation and your specific section of the market, not the headlines that you might read, right? Let's give you some real, accurate, actionable data that you can use in whatever way you'd like, but getting access to the accurate information and then talking with somebody that can help you put the pieces together of your plan and help you understand what to expect when those things happen. I think it's a very beneficial conversation. I'm happy to have that, even if it's something you plan on doing on your own as a for sale by owner or whatever the case might be, but I'm here to help. And of course, we'd love to earn your business as real estate agents that have sold, over 1,500 homes and the past 20 years, about $1 billion worth of over $1 billion worth of real estate sold here in the Charleston area. So we'd love to, be your agent. If you want to reach out to me personally, my number is 843-800-0065. That's 843-800-0065. You can check out our website, listingsincharleston.com. That's listingsincharleston.com. Or check us out on YouTube. We've got all our videos on there, over 1,000 videos. We've also got our podcast on iTunes and Spotify and Google Play and all that great stuff. So plenty of ways to catch this information if you can't listen to the whole show. So before the break, we were talking about how the Federal Reserve didn't swoop in and magically, save the real estate market with aggressive rate cuts. In fact, they kind of announced the opposite, which we'll see how that plays out. But what I want to talk about right now are where I see some really good opportunities in the Charleston real estate market. They're kind of hiding right in plain sight. And believe it or not, they're not necessarily resale homes, right? They are new construction homes. Now, if you've driven around Charleston lately, obviously you've seen all the development in Somerville, Johns Island, Cane Bay, Nexton, Carolina Park. I mean, it's the development is really everywhere. And on the surface, looks like builders are doing fantastic, right? Model homes are beautiful. Sales offices are busy. Behind the scenes, though, I think there's a little something different going on. And this is what builders really kind of don't want you to know. But across the country, builders have become significantly more aggressive over the past year, not because business is booming, but because buyers have become much more selective, right? The frenzy we experienced a few years ago is obviously over. And back then, builders could release, 10 lots on a Friday morning, and by lunch they were sold. In fact, they went so far as that some builders just said, hey, real estate agents, we don't need you anymore. We're just going to pay you, a little flat fee here for helping us bring your buyer along. Thanks so much. We'll take it from here. Which didn't sit well with a lot of real estate agents. And there are some builders out there that now have a pretty tarnished reputation as a result of that. And not just that, quality of construction and the way in which they treat people and address issues that are their fault. But I'm not going to get on that soapbox. There are plenty of great builders out there. You just have to hold them accountable. But builder sentiment has gone down significantly. And according to the latest industry data, 6 of the 10, big national builders are currently offering incentives to buyers, and roughly a third of them are just cutting prices outright. And for those of you that don't know, builders hate cutting the price. They really don't like it. And the reason why is because they want to maintain appraisal values in that neighborhood. If they cut the price, then everybody that's purchased a new construction home in the course of the past few months immediately takes a hit, right? And that doesn't sit well with them. So what they do is they offer incentives, right? They're looking at things like closing costs or a temporary 2-1 rate buy down like we talked about. Maybe even a permanent interest rate buy down. A lot of these builders own the lender, the finance company, the mortgage company that is going to provide the mortgage to you. And so they're going to give you some great incentives in return for using their lender. And on the surface, they're probably not making any money on the lending side, but they're selling the home, profiting, and so on and so forth. So it all kind of makes sense to them. But I think that you as a buyer can win against these builders in certain areas, in certain situations. You do have to kind of time it right, but what we're seeing is builders negotiating again. And obviously, for a lot of builders, their number one lead source is us, real estate agents. So guess what? Now they're starting to treat us a little nicely again. That's been a nice change. But here's, I think, one of the biggest mistakes that buyers make. They're driving around, they see a new construction community, they pull in, they go to the sales office. All you're doing is scratching an itch. You're not there to buy a house. You're not there to build a house. You're curious. And so here's what happens. The sales rep is going to make you sign in, right? Record your information. They're going to ask you if you have a real estate agent. You're probably going to say no. And then if you, in fact, are interested in buying or building a home in that community, there are some builders out there that will just say, hey, look, you came to us. We are the procuring cause of the sale. You can have a real estate agent, sure, but we're not going to pay them. You know, we're responsible for making the sale. And now you, as a buyer, are left with trying to find a real estate agent that's going to represent you and do a good job for you and, you know, take dozens of hours out of their life to assist you in this process for free. So that's probably not going to happen, which means that you're just going to work with the agent that's on site, and all the information they've given you is because they represent the seller. Some of these folks are licensed agents. Some of these are employees. But either way, they represent the builder, and they're always going to represent the builder. Now, of course, they have to be, you know, fair and honest, and there are rules that they have to abide by when purchasing the property. But they're certainly not there to, they're not in your corner. So the thing that I want to stress is have a conversation with the real estate agent before you go into that sales community and say, like, hey, if I mention that you would be working with me, you know, you guys can have that side conversation, maybe sign an agreement that just says, hey, for this specific development, if you want to buy a home, I'm the agent, which protects you, gives you that representation rather than having to work with the agent that represents the builder. Because that's, in all honesty, that's where I hear all the horror stories. That's where I hear all the issues with regard to new constructions, because they don't have somebody in their corner to hold that builder accountable. And these builder contracts, they're all different. You know, there's no standard boilerplate builder contract. And so guess what? Since they write their own, who does it favor? The builder. So I think it's just really important that if you're going to look for a new construction home, there are some great deals out there. If you want access to what I've put together is like, here are the different communities and here are the incentives that they're offering. If you're considering new construction, I really don't know of a place or agent or someone that I don't think anything exists that says, hey, here's all the incentives that are going on right now in all the different communities with all the different builders. Of course, you can go to each individual builder to get that for their specific communities. But I don't know of any other one-stop shop place where you can say, hey, if I want new construction, here are the incentives that exist in these different developments. If you want access to that, feel free to give me a call, or you can just text me and I can send that over to you. Text the word builder and text it to 843-800-0065. Text the word builder to 843-800-0065, and I'll send you a list of all the new construction communities in the area you're looking in and the associated incentives. And you can see why it is now so hard for some of these owners of homes, right, that are in the resale market to compete with new construction. Some of these new construction communities, you walk in and you've got an introductory interest rate of 3.99%. That's really attractive. So if you want information on that, on that kind of stuff, again, just text the word builder to 843-800-0065, or you can call that number and we can have a chat about what you're looking for, and I'll send you that relevant information. Or just check us out online and reach out to us that way, and we can get in contact that way. That website address is listingsincharleston.com. That's listingsincharleston.com. But just remember, for your own protection, if you intend on using a real estate agent to represent you in a new home purchase, you're building a home, you're buying an existing new home, I think it is absolutely imperative that you have your own representation. Doesn't cost you anything because these builders will provide compensation to the agent so long as we kind of go through the appropriate channels and we have that opportunity to have that conversation. So I guess the whole point is that you just don't put yourself between a rock and a hard place now that you have this information before you step foot into a sales office at a new construction community. Ask those questions. And if they're going to cut out an agent in the future and prevent you from having your own, representation that is paid for by that builder or seller, that's obviously important information to have. So if you'd like to work with us on new construction, we've done a lot with new construction. We've got a builder trade-in program that I've been the president of here for several years. So if you want more information on that, 843-800-0065, 843-800-0065, or listingsincharleston.com. We've already covered a pretty good amount of ground today talking about changes in the market, some opportunities for new construction, some do's and don'ts with that. And what I want to talk about now is pricing and pricing strategy, and I want to talk about price reductions. I think we as a market, as a population of people, need to kind of let go of this notion that if you adjust your price, something is therefore wrong with your house. It's a bad house. Something's wrong with it. That is not true. It can be true at times, but I think, and I'm not sure when it happened, but at some point, homeowners began to believe that as soon as they reduce their asking price, blood is now in the water and the sharks are going to start circling. So I want to talk about that, and I want to really help you guys understand the reality of pricing in this market. I was having a conversation with somebody that I've worked with for the past, 15 years. They own a large portfolio of properties. I helped them acquire a significant portion of them, and now they're looking at divesting, or they're looking at their portfolio and they're saying, all right, which of these investments is performing in line with market expectations? Are there any that are overperforming? Are there any that are underperforming? If there are any that are underperforming, what would it look like to sell that property through something called a 1031 tax deferred exchange and essentially transfer my equity to a different, better income producing property? In other words, how do I optimize my portfolio? And at times, does it make sense to sell something? And so we were just talking about, the changes in the market over time, and, that we're just not in 2021 anymore, right? We're working with buyers that are very value-based, right? They're negotiating, they're taking their time, they're asking questions, they're going to see the house 3 to 4 times before they make an offer. They're getting a bunch of inspections done. I mean, in other words, they're acting like the buyers used to act before the pandemic. And honestly, that's normal. But one of the hardest conversations that I think we have with sellers today in this market is helping them understand that their competition isn't what your neighbor sold for 4 years ago. Your competition is what's available this weekend. If there are 5 similar homes for sale to yours, buyers don't care what one sold for during the hottest market in American history. They're looking at the 5 homes they can buy today, and they're asking which one gives me the best value. That's the question that determines your sales price, not nostalgia. And here's another thing that's changed. Obviously, buyers are way more payment conscious. They're looking at the monthly payment and they're saying, can I actually afford this? They're factoring in insurance and the potential that that insurance might continue to go up like it has here locally for the past several years. They're looking at taxes and HOA dues and utilities and maintenance. So when a home is priced too aggressively, buyer don't just like shrug and make an offer anyways. They don't even schedule the showing in many instances, right? That's a huge difference from a few years ago. And so what we'll see many times with a property that's overpriced is within the first 7 to 10 days of it being online, we'll have a lot of people that will view it and save it. And so on the surface, it looks like, hey, we've got all this online traffic, which is great, but you need to make sure that that online traffic transfers into showings. Otherwise, I just kind of chalk it up as, hey, it's a really pretty house to look at online, and I'm going to click that little heart button that saves it so that once they actually make some sort of change, I'll be notified, and then we can start to take it a little bit more seriously. But basically, a save for a lot of folks is a watch list. It's a, hey, I want to know when that property gets more realistic on their price. And so that's a big difference from a few years ago. And at the end of the day, the market speaks first, right? Not me, not Zillow, not your neighbor, not what you hope your house is worth. The market tells us what buyers are willing to pay. And if the market isn't responding, it's giving us valuable feedback. Too many sellers interpret the feedback that we get emotionally. And I would prefer that they treat it more like data. If your home has had dozens of showings and no offers, that's data. If you have a ton of online traffic but very few showings, that's data. Now, one thing that's nice for us is that in our market, whenever we're listing a home for sale, we have, and I've mentioned this before, but we have a third-party company that schedules all of the showings for us. So I go online, I select the homes that I want to show a client and the day and time that I want to show it to them. And then this company basically just handles everything. It's a concierge service, and all real estate agents use it. Well, almost all real estate agents use it. But the point in telling you that is that anytime there's a showing recorded, it becomes a data point that I then get to use in my conversations with my clients. So when we sit down and we're talking about the process of selling their home, one of the very valuable data points is, what are our expectations with regard to how the market should be responding to our property once we put it on the market? How many showings on average are other properties that have sold getting per month? How many showings on average did it take before they went under contract? And then how will we compare to those data points? So all of that is information. Again, the market speaks first. The question is whether, we're listening, right? And so the good news is that well-priced homes in Charleston are still selling. We'll have some data here in a few weeks from the company that we've hired to provide us with some data points that just aren't available from our, association or from the MLS, because there's a lot of data they give us, but not some specific data that you really want. Like, what is the impact to the seller's bottom line of overpricing your home versus pricing it in line with fair market value? What happens when a property reduces their price more than once? How much of a price reduction should be taken in order to be consistent with the market? All of these data points are really important, and it takes a little patience for you to have a conversation with a competent, experienced, motivated real estate agent in this market to kind of, hopefully they actually have these data points and they're talking you through the reality of the market. But honestly, far too often, we're seeing folks that are working with agents that come in with like a printout, which is a one sheet of, hey, here are all the addresses, bedrooms, bathrooms, square footage, and average price per square foot. And so we think that you should be somewhere in here. It's a really kind of lazy way of interpreting the value of something so expensive. Whereas with me and with our team, we're going to take individual adjustments into account for things that you have that your competition doesn't, and vice versa, just like an appraiser would. That's, to me, what makes sense, and that's why our pricing, more often than not, is accurate. But this market is a weird market. Inventory is ebbing and flowing. We've had a lot of distractions, right? Politically, not distractions, but we've just had a lot of action, right? It's been a busy year so far. And it's caused a lot of people to kind of sit on the sideline and wait and figure out what in the world's going to happen. But I think when there's chaos, there's also opportunity, which is why there are some great deals out there. There are some great opportunities for sellers to get top dollar for their house and then go and get a great deal on something they can buy. And that for people is exciting. It's, that is a reason in and of itself to maybe explore the opportunity in the market opportunistically. Not everybody that moves has to move right now. So, you've got the opportunistic folks out there that say, hey, if the right thing or the right opportunity came along, yeah, I would very seriously consider it. And so that's when we start getting into things like pocket listings and off-market properties and, all these different strategies. And at the end of the day, solutions that we can provide for people. But in regards to pricing, and just getting back to, the center line here, a lot of people are still missing the mark, and it's costing them money. Out of every 100 properties that list for sale in Charleston, 27 of them fail to sell. They expire after months on the market, or the seller fires the agent, or the seller decides not to sell it. They can't get the price they want. Whatever reason, fill in the blank, they take the home off the market. So basically 1 in 4 homes gets on the market, comes off the market. Of what's left, almost half are selling without a price reduction, and they on average are getting 100% of their asking price in 7 days. In fact, a third of those homes are getting over asking price. And then you've got the other half of the homes that sell that end up taking a price reduction that weren't priced correctly from the beginning, or maybe they just had high hopes that someone would come along and there'd be some negotiability, right? Because a lot of sellers are saying, well, hey, let's give that buyer that feel-good, feeling of negotiating against us. But if you're overpriced to the point where you're not generating the interest and able to capitalize on those opportunities, then you're not really gaining any ground. And so for those that have to reduce their price, they are taking significantly less. There is a price reduction penalty, essentially, that they're paying. But on top of that, it takes 10 times longer almost to sell the home. I think it's actually 11 times longer, close to 80 days for homes that had to reduce their price to end up selling. And they end up selling for like 91 or 92% of their asking price. I have to look at the specific numbers. That's off memory, but that's essentially what happens. So pricing isn't always going to be what you want to hear. It's not necessarily going to be consistent with what we saw several years ago in the hottest real estate market the country's seen for a very long time. I'm not going to say in totality, but in a very long time. What you need to look at what's happening today. Who are you competing against today? What is a buyer looking at today and comparing my home against, and how does my value stack up against theirs? If you'd like more information on that, when we come back, by the way, I want to talk about what I believe is going to be one of the biggest wealth transfers in American history, and why millions of baby boomers and baby boomer owned homes are, I think, going to reshape a large portion of the real estate market, not just nationally, but here in Charleston over the next 2 decades. So if you want to reach out to me, you want to talk about what your home is worth, you want to learn more about what some of these incentives are with some of these different builders out there, or just talk shop, find a way to maybe make your plan make sense and look for some opportunities in this market, happy to help in any way I can. My number is 843-800-0065. That's 843-800-0065. Or check us out online at listingsincharleston.com. That's listingsincharleston.com. So I want to finish the show with something that I think really doesn't get as much attention as it should. And that is that I think the landscape, not just nationally, but also here locally, is going to change over the course of the next probably 2 decades. And it's, it's not because of interest rates or politics or inventory. It's people, specifically baby boomers. There's this thing called the Great Wealth Transfer, which is expected to take place over the next 2 decades or so, where about $80 to $100 trillion in wealth is expected to change hands. And a lot of that is tied up in real estate, right? And so that's that's been the plan for a long time in that generation, is you buy a home that you can afford and you stay and you build equity over time. And that home can be used for things like, it's the asset that helped pay for college. It's the place where, holidays were celebrated. It's the place where the kids grew up. And over the next, 20 years, millions of these homes are going to change hands, not because they're listed for sale, but because life happens, right? And so for years, we've had all these people ask, where's all the inventory? There are not many homes for sale. I would move if I could find something I like. We've heard all of that. And part of the answer is that a lot of it's still occupied by baby boomers, right? They bought their home decades ago in many instances. They're not necessarily like today's millennial buyer where, and as surprising as it is to say, the average age of the first-time home buyer is 38 years old. That is a long time of missed appreciation. And it obviously all revolves around everything that's been happening economically, politically, real estate market perspective, interest rates. It all ties together, right? But a lot of baby boomers have been in their home for a long time, and that's part of the reason why that inventory hasn't come on the market. And so eventually, obviously, life happens. People decide to downsize or move closer to family or require assisted living. And eventually, that home becomes part of an estate. And that's when families are kind of faced with decisions they haven't had to make before, right? Do we keep the house? Do we rent it? Do we sell it? Do we renovate it first? Should one sibling buy the other out? What about taxes? There are a lot of they're not just legal questions. There are a lot of emotional questions that come up with that. And so, I have helped. It seems like that's the majority of people that I work with right now are folks that are kind of going through that right now. Of course, our team works with folks, in all different stages of life. But I guess the point is that we are very experienced in helping folks in this specific stage of their life make sense out of the transition. In many instances, the home that they're selling is just too much for them. It's too much to maintain. It doesn't make sense to pay to maintain the home. They don't use a majority of the space, and a different space would just suit their lifestyle better. Or maybe it's time to get closer to family or closer to grandkids, or, again, maybe it's time to maybe look into assisted living. But I encourage those that are listening to, first of all, ensure that you have some sort of estate plan in place. And if you don't, let me know. I've got some great suggestions and recommendations for folks that can just help you kind of get those important aspects of your life in order and documented. But, I think that having that conversation is a healthy conversation. So, and there's a lot that kind of goes into that planning that should be discussed. So if you haven't had that kind of conversation, if you feel like that's maybe starting to sneak up on you and you want to put a plan together that helps you and your family understand what makes sense, what should be the next step, happy to help in that regard. My number is 843-800-0065. That's 843-800-0065. You can reach out to us through our website, listingsincharleston.com. That's listingsincharleston.com. And again, just, in this particular category, this particular segment of the show, with regard to baby boomers downsizing, maybe needing assisted living, or just deciding that home isn't the right home for them, I understand that those aren't easy conversations, but they're far easier over dinner than during an emergency. So reach out to us if we can help with that in any way. Of course, we take that responsibility very seriously. 843-800-0065. Or reach out to us, listingsincharleston.com. Thank you so much for listening to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA, and for your support over the past, almost 15 years that I've been on this program. So thank you for that. Thanks for listening. You guys enjoy your weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.